Welcome to Grain TV. It's Monday, November 14th, another down day in the grains. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, corn gave up 3¼ cents. Beans only losing 1 after being down as much as 9 at one point, and wheat in Chicago continuing to see losses, losing 8¼ cents, down below $4 a bushel. Overall, we started the week on a negative note. First of all, China's soybean market really got hammered as government officials there try to curb excess speculation in commodities, and soybeans was a big loser in China to start the Sunday night session. And also, wheat continues to be pressured as the U.S. dollar goes sharply higher today, gaining as much as 1%, and ideas out of Russia that they will continue to see big wheat crops this coming harvest season as we get into next summer. But there was some good news on the horizon. First of all, USDA's export sales reporting system put out a string of export deals that were announced this morning. First of all, 175,000 metric tons to China for sorghum, and also 324,000 metric tons of soybeans to China, as well as 132,000 metric ton soybean deal to unknown. So overall, a big number of 450,000 combined of new business done in soybeans that sort of helped stabilize the market, even though China's futures got punished and we started on the downside in the overnight session. So nonetheless, we continue to face sort of an uphill battle with burdensome supplies and the rising U.S. dollar. We're going to talk more about where the U.S. dollar stands and what that might mean for commodity markets. But let's take a look at export inspections. Monday's weekly export inspections report out of USDA. This too was disappointing, especially for corn and wheat. Corn coming in well below expectations that range from 900,000 to 1 million metric tons, or 1.1 million metric tons. Overall, exports for the week were only 618,000. Beans coming in solid at 2.785 million metric tons, and wheat a very disappointing number with only 191,000. So overall, nothing here to really get excited about, although beans got some support from that number. Corn and wheat certainly didn't get any relief in the selling department, especially in wheat, where the market is really focusing on the U.S. dollar strength here of late since the election. Turning to tomorrow, we will have soybean crush numbers from NOPA. The numbers are expected to be very large, coming in at a record large for October. The expectation is for 160.5 million bushels to be crushed in October. Range of estimates from 158 up to a high of 163.1. Again, this is expected to be a record large number based on really good harvest potential in October and the rate that crushing plants were going in October. So look for that tomorrow about 11 a.m. Central Time as a potential market moving factor. Let's take a look at where the U.S. dollar stands. Ever since we got past last Tuesday's election results, the equities market started to trade higher. Bonds were pushing lower. There's an expectation the economy will see a rebound, the interest rates will recover, and the U.S. dollar has just shot higher in the last week, and today in particular up nearly 1% and reaching its highest point since we were almost a year ago, 13 months to be precise, in terms of the high in the U.S. dollar. Now keep in mind, this last year's high that we experienced in the U.S. dollar coincided with very, very weak exports. If we look at exports, they really struggled from harvest of last year, last fall's harvest, until we got till about April. If we look at the monthly export sales of corn, soybeans, and wheat combined in 2015, that's in the blue line, and look at 2016 numbers in the orange, you can see that 2016 numbers were really weak in January and February. So going to the first of this year, they were well below 2015 numbers. But as we got a lower dollar in March, April, May, our U.S. exports program started to really pick up, and it's been relatively strong compared to last year, and especially in the case of soybeans and wheat, even doing fairly well compared to last year. But that's all at risk, I think, with the U.S. dollar approaching these highs that we saw 13 months ago. So I think that's a really bearish fundamental that has ramifications as we move forward into this post-harvest marketing season. And we know that certainly there's plenty of supplies out there. There's certainly a lot of competition, and with the U.S. starting to lose some of its competitive position as these currency values change, that poses problems moving forward, especially in wheat, which is so export sensitive to competition. Speaking of wheat, this morning we had our technical alerts. Every morning we're putting out technical alerts to our trading clients to get a sense of where we think the market's going to go. This morning's wheat markets, we pointed to going lower, reaching a low on Chicago wheat at 396, wheat reaching a low of Kansas City wheat at 404, and those numbers were in fact achieved because of the weakness we've been talking about. So if you're looking for ways to help improve your trading performance, your marketing decisions, technical alerts is a good way to help gauge where the market may be going based on purely technical indicators. So by all means, visit us online at grainhedge.com, take a demo of our trading platform, sign up, and get the technical alerts delivered to your email box every morning so you can have a sense of where the market may be heading in the coming day. That's all we've got for today. Tomorrow we'll be talking about notebook crush numbers. Have a great night.